The over-the-counter OTC market in binary options and Forex trading refers to a decentralized, off-exchange trading environment where transactions take place directly between brokers and traders, typically during weekends or non-standard trading hours when traditional markets are closed. Unlike regular trading sessions that rely on liquidity from global financial institutions and exchanges, the OTC market operates on broker-generated price feeds, making it crucial for traders to understand the nuances of pricing, volatility, and execution. OTC markets often display smoother trends and slower price movements, which can benefit certain strategies like trend following, support and resistance breakouts, and time-based setups. However, the lack of centralized pricing also means that traders must be cautious of potential price manipulation, false signals, or widened spreads, depending on the broker's system. A solid OTC trading strategy begins with identifying consistent patterns in price behavior during weekends, such as repeated pullbacks, consolidations, or predictable bounces near psychological levels, like 0.500 or round numbers. To create a setup, traders should combine basic price action tools like trend lines, horizontal support, resistance zones, and confirmation candlesticks such as pin bars, engulfing patterns, or inside bars. For example, when price breaks above a resistance level during OTC with a bullish engulfing candle and volume indicators, if available, support the move, traders may consider entering a call option with a 1 to 5 minute expiration depending on the observed market rhythm. Many OTC traders also incorporate indicators like the RSI for identifying overbought or oversold conditions, or the stochastic oscillator for spotting momentum shifts at turning points. Another effective approach is using moving averages, such as the 20 EMA and 50 EMA, to define trend direction and generate crossover signals for entries. Trade execution in OTC requires discipline in avoiding overtrading, setting clear time slots for analysis, like monitoring setups at the start of each 5-minute candle, and maintaining strict risk management, especially since weekend trading can tempt traders into revenge trading or unnecessary risks due to the more relaxed environment. Backtesting your strategy using screen recordings or detailed weekend trading journals is essential to refine entry criteria, pinpoint profitable sessions, and identify broker-specific price tendencies. It's also important to use demo accounts for testing OTC strategies before going live, as real market dynamics during weekends can differ significantly from weekday trading. Moreover, since OTC pricing is unique to each broker, traders should stick with one platform and avoid strategy hopping across different brokers during the same session to prevent misalignment in signal generation. Lastly, success in OTC trading doesn't come from random luck or gambling behavior, but from treating the weekend as a structured trading session with planned entries, disciplined exits, and emotional control. Whether you're a beginner or an experienced trader, mastering the OTC market can offer valuable opportunities to trade in a quieter environment, provided you understand its risks, limitations, and potential for strategic advantage through consistency, patience, and well-defined setups.